It is September 1945. The war is over. Germany has surrendered. Japan has surrendered. The Allied nations are beginning the enormous work of rebuilding a world that has spent 6 years destroying itself. In London, there is celebration, exhaustion, and a quiet, overwhelming sense of relief. In Washington, there is something else entirely. The United States emerges from the Second World War as the most powerful nation in the history of the world. Its territory is undamaged. Its industrial capacity has doubled. It holds 2/3 of the world's gold reserves. Its GDP accounts for roughly half of total global economic output. It has the atomic bomb. It has the largest navy, the largest air force, and the most productive economy ever assembled. Britain, by contrast, has won the war and lost everything else. Its cities are bombed. Its treasury is empty. Its overseas investments, the accumulated wealth of 2 centuries of empire, have been liquidated to pay for the fighting. It owes money to India, to Egypt, to every country in the sterling area that has supplied goods on credit during the war. And in a matter of weeks, the United States is going to end Lend-Lease, the wartime program that has been supplying Britain with American goods at no immediate cost, and Britain will have nothing left to pay its bills with. Into this situation, the British government sends one man to Washington. He is 62 years old. He has a severe heart condition. His doctors have told him that the stress of international negotiation could kill him. His name is John Maynard Keynes, and he already knows how this is going to end. John Maynard Keynes is one of the most celebrated intellectuals of the 20th century. His ideas about government spending, aggregate demand, and the management of economic cycles reshaped the way every major government in the world thought about its economy. His framework dominated economic policy for 3 decades after his death. His name became an adjective, Keynesian, applied to an entire school of economic thought that still shapes policy debate today. He is remembered as a man who won, who redesigned the global financial architecture at Bretton Woods in 1944, who argued his case against the most powerful economic establishment in the world and left his mark on the institutions that governed the post-war order. What is almost never told is what happened next. Because immediately after Bretton Woods, immediately after his greatest intellectual triumph, Keynes was sent back to Washington to do something that was not a triumph at all: to beg, to negotiate from a position of complete and total weakness, to secure, for a country that had just won a world war, the financial terms of its own permanent diminishment, and to do it while dying. To understand what Keynes was walking into in the autumn of 1945, you have to understand what Britain had spent to win the war. Between 1939 and 1945, Britain spent approximately £7 billion on the war, roughly 3 times its entire annual national income. It financed this through taxation, domestic borrowing, the sale of overseas assets, and the accumulation of sterling balances, debts owed to countries in the British Empire and Commonwealth that had supplied goods and services on credit. By 1945, Britain's sterling debts alone amounted to approximately £3.5 billion. The country that had entered the war as the center of the world's largest empire had emerged from it as the world's largest debtor. The wartime Lend-Lease program had been essential to British survival. Without it, Britain could not have sustained the war effort past 1941. But on August 21, 1945, 12 days after Japan's surrender, President Truman signed the order terminating it. Immediately, without the gradual wind-down that the British had hoped for. The British cabinet received the news with something close to panic. Without Lend-Lease, Britain had no way to pay for the food and raw materials it needed simply to keep its population fed and its industries running. Its dollar reserves would last, at current spending rates, for approximately 3 months. Keynes arrived in Washington in September 1945 with a negotiating position that was, in retrospect, almost delusional in its optimism. Not because he was naive, but because the alternative was to begin the negotiation by conceding everything before it had started. He asked for a grant, not a loan, a grant. $6 billion, given outright, in recognition of the disproportionate burden Britain had borne in the early years of the war, fighting alone, while America remained neutral. Keynes argued that this was not charity but justice. The Americans said no. The lead American negotiator was a Treasury official named William Clayton, a Texas cotton merchant turned government administrator who was courteous, capable, and utterly unmoved by arguments about historical justice. What America could offer was a loan, at interest, with conditions. The conditions were the thing that broke Keynes. The Americans wanted Britain to make sterling fully convertible into dollars within 1 year of the loan agreement. This meant that any country holding pounds could immediately exchange them for dollars, draining Britain's dollar reserves at whatever rate the market demanded. Keynes understood exactly what this meant. Sterling convertibility, introduced at a moment when Britain's dollar reserves were minimal and its sterling debts were enormous, would almost certainly trigger a run on the pound. The countries holding sterling balances would convert them to dollars as fast as possible. Britain's reserves would collapse, and the loan that was supposed to provide 5 years of financial breathing room would be exhausted in months. He said so, repeatedly, forcefully, in language that left no ambiguity about what he thought would happen. The Americans listened politely and held their position. They understood the leverage they had. Britain needed the money. Without it, rationing would intensify, industries would shut down, and the Labour government that had just won a landslide election on promises of reconstruction, and the welfare state would face an immediate economic crisis it could not survive. The negotiations ran from September to December 1945. Keynes spent those months in a state of sustained physical deterioration masked by sustained intellectual effort. He attended meetings, drafted proposals, delivered arguments, entertained counterproposals. He worked through fatigue that would have incapacitated a healthy man. In December 1945, Keynes signed the Anglo-American Loan agreement. Britain received $3.75 billion, not the $6 billion grant he had asked for, not even the $5 billion loan he had hoped for, but $3.75 billion at 2% interest, with sterling convertibility required within 1 year of ratification. Keynes returned to London and presented the agreement to Parliament. The reception was not what he had hoped for. Members from across the political spectrum attacked the terms as humiliating. Some called it a betrayal. Others called it economic colonialism. The conservative opposition abstained rather than vote for it. Keynes sat in the House of Lords gallery and listened to his achievement being condemned by people who had no idea what the alternative looked like. The loan passed, by a thin margin, with almost no gratitude. Keynes was right about sterling convertibility, almost to the month. Britain made the pound convertible in July 1947, as required by the loan agreement. Within 5 weeks, the run on sterling that Keynes had predicted in 1945 was consuming British dollar reserves at a rate of over $100 million per week. On August 20th, 1947, 37 days after convertibility had been introduced, Britain suspended it. The experiment had lasted 5 weeks and had consumed a significant portion of the loan that was supposed to last 5 years. By that point, Keynes had been dead for 16 months. He had returned from Washington in December 1945 in a state of extreme exhaustion. He attended the inaugural meetings of the International Monetary Fund and the World Bank in Savannah, Georgia in March 1946, where he found the American vision of those institutions already diverging from what he had designed at Bretton Woods. He gave a speech that was received warmly but not heeded. He returned to Tilton in April 1946. On Easter Sunday, April 21st, 1946, John Maynard Keynes suffered a massive heart attack. He died that morning at his farm with his wife beside him. He was 62 years old. The loan he had negotiated began its 61-year journey through the British public accounts. Interest payments, principal repayments, the slow arithmetic of a debt contracted in desperation, serviced through decades of austerity, reconstruction, decolonization, and the long adjustment of a nation recalibrating its place in the world. Britain repaid the loan in 50 annual installments. On December 29, 2006, the British government made the final payment, $83.25 million transferred to the United States Treasury, closing a debt that had been opened in the ruins of the Second World War. A Treasury spokesman noted the payment quietly. There was no ceremony, no statement from the Prime Minister. 61 years after Keynes had signed the papers, 61 years after he had sat in a Washington negotiating room, visibly dying, extracting the least bad terms he could from a position of complete weakness, the account was finally settled. There is a question that the story of Keynes and the Anglo-American Loan forces you to sit with. He knew. He knew what the terms meant. He knew that sterling convertibility would fail. He knew that the loan was insufficient for what Britain needed. He knew that the agreement he was signing represented the formal end of British financial independence, the moment at which the pound sterling ceded its position as the world's reserve currency permanently to the dollar. He signed it anyway. Not because he had run out of arguments, not because he had been outmaneuvered intellectually, but because he understood something that the members of Parliament who criticized the agreement did not, that the alternative was worse, that the choice was not between a good deal and a bad deal. It was between a bad deal and no deal meant catastrophe. This is the kind of decision that history rarely rewards with recognition. The people who prevent disasters are almost never celebrated with the enthusiasm reserved for those who win victories. Keynes did not win anything in Washington in 1945. He managed a defeat. He took a position of absolute weakness and extracted from it the least bad outcome available. He accepted humiliation for himself, for his country, for the empire that was quietly ending, because the mathematics left him no alternative. And then he went home and listened to Parliament tell him he had sold Britain short. The American century that followed, the post-war order of dollar dominance, American-led institutions, and the gradual dismantling of European empires, was not an accident. It was the direct consequence of the financial realities that Keynes had negotiated in 1945. The world he had tried to shape was shaped instead by the terms of its debts. Keynes had understood all of this. In his private correspondence from the Washington negotiations, he wrote with a clarity that his public statements could not always afford. He knew what was being lost. He knew that the Britain he was representing was ending in those negotiating rooms, document by document, condition by condition. He signed because someone had to, and because he was the only person in the room who fully understood what he was signing. On December 29, 2006, the last payment was made. 61 years of interest and principal, finally settled. Keynes had been dead for 60 years by then. The empire whose finances he had managed was long gone. The institutions he had designed had been reshaped by the very forces he had tried to constrain. But the debt was paid, quietly, without ceremony, as he might have expected.